Hi guys, I got a real interesting video for you guys today. It's in regards to SPAC. Stay tuned, I think you might like this. Guys, today we're going to discuss what is a special purpose acquisition company and how that is happening more frequently right now in the stock market. Basically, companies are trying to IPO. They're trying to bring their company out to the market in the New York Stock Exchange, and what they're doing is they're going about it in a way that's called a SPAC. And I want to first off start off by going over what is a SPAC, and then turn into how can that give you some examples of companies that have gone through a SPAC, and then show you examples of how can this benefit you as an investor. It's real important. There's two ways of offering a public offering. One of them is a traditional IPO, but the second way is a more common way as of late. Companies have been using a secondary company to kind of help them to go public. One recent company that's done really well is DraftKings. I'll go over their charts, I'll go over their information, but to get started, I want to read off here what is a special purpose acquisition and give you an example. A special purpose acquisition company, SPAC, is a company with no commercial operations that is formed strictly to raise capital through an initial public offering, IPO. So basically, to make this easy, it's basically a company, say for example DraftKings, and then they get together with a secondary company that provides liquidity, money, and DraftKings can use that money to expand their operations, to use it for expanding their whatever it is they're doing. But they're basically going together, they're merging as one company and then going public. I guess the reason why they're doing this more often is I think it's an easier way of going public through a SPAC. So I'll give you an example. I'll give you some examples, and I'll show you how this can really benefit you as an investor. Okay. So through the process, first you do the initial merger. That's step one. So DraftKings here, if you look at the chart here, started off right around July of last year. And one thing that's real particular about these SPACs is that they usually start right around $10. So basically $10 is the baseline of where you start, and then it goes up from there. The intriguing part of this, and why I've been investing in SPACs lately, is because, like I said, $10 is pretty much the floor of the SPAC. So if you look at the chart here, I'll show you. If you see, it started out at 980. It went up, and it came back down right here, right around March 20th, 2020, to 1148. However, it never really reached back to $10. It continued going up. Now, I want you guys to understand this. The baseline of $10 is basically the base. So before a merger, so basically what they do is that they start off, they're gonna merge with the company, and then they set a merger date. So by that date, they're gonna merge together. Before that date happens, if you were to put money into DraftKings or buy some of their stock, $10 would be the base. So before that date happens, your stock can go up, but it pretty much will never fall below $10. That's the interesting part, and that's the part where I've been able to make money on these SPACs. So I play them, and I usually try to get out before the merger date. I'll give you another example. This is DraftKings. This is a real popular, and since it went up from $10, it's gone all the way up to 63, and obviously it came back down. Right now it's currently trading at 47.90. Okay. I'll give you a secondary example on a SPAC. Some of these companies, you're probably not going to recognize them too well because they are companies that are sometimes you don't know them too well, but it's kind of like saying how would you have liked to invested in Apple before you knew what Apple was all about, okay? But I do get into some of these plays, and I just don't get, there's so many of them, you can't just choose one or the other. I try to choose ones that I see a future in. I'll give you a secondary example. There's a company that went public. It's called Switchback, ChargePoint. So the merger was between ChargePoint and Switchback. ChargePoint is actually the company, it's the leading company in North America that provides the electric vehicle charging stations. So if you were to think, okay, how about, this company is the number one company right now in the United States of America that has the most charging stations for electrical vehicles. Now, we know that the EV market is going to continue to go up. So what does that mean for this company? It means that this company will probably continue to go up as well. So when I say this and I tell you and I give you information, it's for you guys to get it and do your own diligence, because I try to give you the information and I want you guys to really focus in on this information, because this information can really make a difference in your income. It's something that I'm invested in, and it's something that I'm giving you, and I'm letting you know. Maybe you didn't know about this company, but now that you know, it's a secondary way of you tuning in and trying to get more information. So if you want to look up ChargePoint, let's look at their chart real quick. It's under Switchback Energy. So I want to look at their chart just to give you a secondary example. Okay, we're going to go to the 1 year chart, and we're going to see that they started off the same thing. They started off right around $10. They went up, they went ahead and merged, but they never went back down to the $10 area. So as you can tell, as you can see, now they're currently trading at $37.32. They started off at $10. So in a period of, I want to say, look, in less than 3 months, they've managed to get from $10.35 all the way to $37.42. Now that's a hell of a return if you ask me. So this company is a real intriguing company, and so I'm giving you 2 examples of companies that have gone through the process that are currently still going up. I want to give you a third one that just started this process, and it's still low enough for you guys to get in and make good money off of, okay? So the name of this company is Skillz. Now, you might not know what Skillz is or who Skillz is or what they do, but Skillz is a gaming company, okay? And this gaming company here offers different types of games, maybe Solitary Cube, Blackout Bingo, Blitz, Pool, Payday. So I don't play these games, but I do know a lot of people that are really into these games. Maybe you've tried this game before. The interesting part about this company is that they not only provide games, but it's kind of like a way that people can gamble as well, because they do some tournaments, and within those tournaments you can also make money. So it's real interesting. I was looking at their numbers, looking at their charts. Their growth rate is outstanding, and it's a company that right now currently just started the IPO process. It hasn't merged yet, but I want to look at their charts, and I want you guys to do your own diligence, okay? It's called Flying Eagle. They're going to be merging with a company called Flying Eagle, okay? So currently, if you look at the 1 month chart, okay? Let's go to 3 months. So actually, let's go to the 1 year. That way I can get it. So on May 2020, they started off at $9.84, and currently they are at $18.65. Okay. So this is a company that I think has a great future, especially with the whole COVID situation, and how companies have, not companies, but people have started going more online, playing more games, staying at home. And not only that, a lot of these people have made millions off of this company because of their tournaments. I'm not too into games. I wouldn't be able to tell you, but I'm trying to put companies out there that you may not know about, but it's better that you know about them now before everybody else finds out. So I didn't know about this company. I found out about it about 2 weeks ago. I started investing in it. My position, I averaged in at about 1582. I have currently 85 shares on this company. So it's already, you could already see that it's gone up since I've started investing into it. So I usually I dollar cost average into these plays, and what I do is I wait for dips, I buy, and I wait for dips, and I buy, and I try to establish my position that way. So these are 3 companies that I'm mentioning. There are 3 companies that I think have a great future. I can't guarantee it, but we can look back maybe a year from now, and I think that this company right here, Flying Eagle, is at an excellent point of entry. You might want to see it dip a little bit and start a position in it, but I think the future growth of this company is really gonna be awesome, as well as the other 2, ChargePoint and DraftKings. So if you guys got anything out of this video, please like and subscribe to this video. Please follow us on Twitter, Facebook, Instagram. We're on there. And please have a great day and keep tuning in. Thank you.